So what happened yesterday, which is quite interesting, is that initially you were looking at the dollar and the dollar sold off, but then in the Q&A, Mr. J.P. Powell effectively said that tapering is going to be concluded by mid of next year, which is quite a strong statement, and that got people buying some dollars. But at the end of the day, the dollar started to weakening because at the same time as tapering is going to finish maybe earlier than people thought, the Federal Reserve themselves are not sure if they are going to increase interest rates next year, right? It's 50-50. But my personal view is that that's probably going to change. It's going to change, and it could easily be that we're going to have 1 or 2 rate hikes by the end of next year. So I think we could still see more surprises from the Federal Reserve over the next couple of months. If we address the first question then, so the tantrum, can it come back? Yes, it can definitely come back. And it will come. There's no question about it. Like when the world's biggest central bank is introducing tapering, it will influence stock markets and bond markets as well. And if we have a similar situation in Europe, then that will definitely make the markets much more volatile. There's no question about that, because what needs to happen then is that the economy of the world needs to be stronger than the effects of the tapering. Now, in regards to the Bank of England, I find that really interesting. That suddenly people think that they're going to raise interest rates by at least 2 times by the third quarter of 2022. And the reason for this is just that inflation is now anticipated to be at 4%, and that could increase and be for most of the beginning of next year, right? And that is way above the 2% target that we have for the Bank of England. So it's more focused on the inflation issue there more than anything else. So that's causing people to think that they're going to do all these rate hikes. But at the same time, the Bank of England, they need to wait to see what happened with the furlough scheme. Like the furlough schemes we have here in Europe and in the UK are very, very generous. And now when that ends by the end of the month, we're going to see really who is going to be coming back to work and who would unfortunately lose their jobs. Because the economy today is not exactly the same economy before the pandemic. Because a lot of professionals, for example, they are still working from home, and people themselves, they don't want to go to the office anymore. They want to work from home, and it's sort of been more accepted here. So a lot of people working in services, it may be shops, but primarily I'm thinking restaurants and things like that. In the city of London, for example, they're probably not going to be as busy as they used to be. So I think the labor market will remain soft, and that's going to be key. So from a trader's perspective, I think people are getting a bit too excited about the Bank of England right now. So if you look at things like the Russell 2000, right? The Russell 2000 is a small cap index in the United States, and the small caps index is stuck there around the same levels we saw in February. So yeah, not all sectors are well, and we could easily see some sort of a sell-off. So if you look at something like the Nasdaq 100, for example, the price bounced perfectly from the August 19th low. And if we do trade below the August 19th low, that level is 14,714. If we trade below that level, we can see some further sell-offs. And the more and more we head towards tapering, and the more and more we start to see effects tapering, the most important thing, in higher interest rates, then that will cause the stock markets to become much, much more volatile.